What's up, everybody? It's Ricky Analog, ready for another webisode of how to dig. Today's episode is going to cover ATMs, at the market offerings. Been getting a lot of questions on them, guys. It's a really simple topic, so we're going to knock this out. It's not going to be near as long as some of the other videos, guys. Let's try to keep this around 5 minutes. But as always, let's do the disclaimer real quick. This is not a solicitation to trade, guys. It's simply for educational and informational purposes. Please make sure you do your own due diligence. Trading is risky. So this will be in the description of the YouTube video. Please familiarize yourselves with it, guys, and let's get into it. Let's just first talk about what an ATM is. It's one of the ways a company can use an active shelf. So a shelf registers shares, and then there's different ways that they can take those shares off the shelf and sell them to the public or to funds or whoever. But one of the ways they can do it is through an at-the-market offering. And basically they're sold at prevailing market prices by a placement agent. So they just call up any one of your favorite placement agents, whether it's HC Wainwright, Lee Rink, Maxim, any of them, all of our favorite characters in our plays. So they call them up, they say, look, I got an ATM I want you to run. And they say, great. I don't think they'd ever turn one down, considering it's free money for them, because they get the shares at a discount and at whatever they sell them. So maybe it's, sometimes I think I see them, usually it's typically 3% discount on whatever the selling price is they sell them for. And so they sell them into the open market, and they turn around and they give that cash to the company. The company uses it to run their business. Typically, almost all biotechs use these, because biotechs, oftentimes the clinical stage ones, don't have revenues. So this is a way for them to pay employees, run their clinical trials, pay their rent, all kinds of stuff, guys. And so let's just take a look at one. We'll look at TNXP first, and you'll see they have one right here back in May. And this is your typical ATM filing that you're going to look at and say, oh, these guys have an ATM. So $9.5 million. They disclose what their MVPHS is, because that's important, because you're only allowed to raise a third of that every 12 months. So if you divide that by 3, I'm sure it's going to come damn near that 9.5 million. It's not a random number. They purposely did 9.5 because it's probably the max they could raise. So basically, the difference between an ATM and any other type of offering is the other offerings, well, actually not all of them, but a lot of the other offerings you're probably familiar with are for a set amount of shares and at a set price. But this is just a set amount of money that they're going to raise. And so whatever price they sell at, they'll still make money. They don't care what price the stock trades at. They just care about having the volume to sell into. And that's why a lot of times you'll see these ATMs get hit after a fluff PR is put out. You know, they do that so to generate the volume, to get some people to buy this as they sell into it after the open. So the other part of this equation is when you find one, to find out how much they have left on it. So you just go to the 10Q, Control F, guys, at the market, and you're gonna find their little section on it, and it's gonna tell you how much they've sold. So you can see that they sold 360,000 shares in the time from the filing till the date this covers to, which is not the 8/13, it's June 30th. Okay, so from May till June they sold 360,000 shares for $1.6 million. Since then till this date, they sold another 600,000 shares for $1.9 million. So that's 3.5 million. So they have another 6 million left on that as of 8/13. And whether or not they sold any since then, the only way to really tell is by looking at the volume on the chart. So 8/13 was back in here. It was, let's see, what was this date? So it was right here, 8/13. They may have sold here on this big volume day. It would not surprise me at all. And they may have sold here and here. And you won't know if they sold any more until you get their next 10Q. But you can try to estimate if they did sell those days, how much they sold. And a general rule of thumb I like to use is anywhere from like 10 to 15% of the volume is probably a high end guess. Low end would be like maybe 5% of the volume. So they traded 12 million shares. Maybe they sold 1.2 million on a high end guess, because you got to think they can't just dump the whole thing. So let's look at another example. I know another turd that has them. DARE, Dare Bioscience. They've got one right here for $4.1 million. And again, they're going to tell you what their MVPHS is based off, 8.7 million shares. Their MVPHS was 12.5 million. So a third of that, 4.1 million. Not rocket science. H.C. Wainwright's running this one. So go ahead and take a look at their 10Q. Actually, I forgot to look at the date that was filed. 9/26. So that actually will not be something you'll find in their 10Q. So let's take a look at the chart and see what kind of... Now, I know this one is extremely low price, so it's probably not something I'd be trading a lot. They filed it on 9/26. Zoom in. So we're around here. I would say anytime you see DARE get a fluff PR and pop above $1, this thing is going to be in play, guys, due to the fact they have that ATM. And I can almost guarantee you their balance sheet's in a world of pain. 12 million cash as of end of June. Well, not burning quite $1 million a month. So I guess maybe not quite as bad as what I assumed it was going to be, but that's why we always go and look, guys. But give them enough time. Give them the oh, I didn't switch back to the thing, guys. Sorry. It was just pointing out, here's their cash, 12.4 million in June. There's what they were burning over that 6-month period. Like I said, though, I know these guys very well. Give them enough time, they'll find a way to burn through that cash, and they'll put out a fluff PR, and this thing will be a short, and they will hammer that ATM because I know the way these guys operate. So hopefully that answers your questions about ATMs, guys. Don't think that they always get hammered off the open. Sometimes, like the better companies that have them, they'll just leak them out into the retail slowly and just slowly pay their bills slowly. And if you're not familiar with the GEVO, GEVO example that I gave in the last episode of How to Dig, that was a great case study on how they actually used the ATM to grow the float and to grow their MVPHS slowly as the price got jammed up to actually get themselves over the $75 million MVPHS hump. So if you haven't seen that episode, do yourself a favor, go check it out, because I do discuss the GEVO ATM in that. Now that you know how ATMs work, you can stop asking me questions about it on Twitter. Peace.